What's up, everybody? Michael Reeder, CPA here, owner of SRA, a CPA firm for small businesses and individuals with a niche working with franchise and business buyers. I'm here with Paul Cook from GUIDANT today to talk about the ROBS C Corp. How you doing, Paul?
Good. Thanks for having me, Michael. Appreciate it.
It's a pleasure. The pleasure is all mine. So ROBS C Corp, it's such a common thing in our world. You know, both you and I, in our respective professions, we're working with business buyers, we're working with franchisees. What the heck is this ROBS C Corp thing?
I hear that question a lot. Back in the day, I had to explain why is it legal, but I think people understand that now. But you know, it's just a unique and interesting strategy that you can access your own rollable retirement accounts, tax-free, penalty-free, and move that money into a vehicle that allows you to buy stock in your own business. That's it in a nutshell. History, it's been around since 1974 when the ERISA Act was written. GUIDANT Financial, we've been doing this since 2003. I've been here about 16 years, so it's definitely doable. It's just still a pretty well-kept secret, I guess.
Yeah, absolutely, and thank you for that, Paul. And it really is a well-kept secret because a lot of CPAs out there have never heard of it before, and a lot of CPAs out there have limited understanding. So, yeah, it really is a well-kept secret.
Yeah, you know, I think there's that's twofold. I think your accounting world, right? Your CPA world, conservative, want to make sure they're always acting in the best interest of their clients from a tax perspective. I mean, all that's obvious about the CPA world, and sometimes a C Corp doesn't jive with that tax strategy. But if you're going to do the ROBS rollover structure in order for your retirement account to buy stock in your own business, you must be a C Corp. So we kind of have to get the CPAs on board a little bit to really embrace that tax strategy as well. The other big, I guess, non-market, if you will, for ROBS is your financial planners, right? Everybody that's managing the IRAs and the 401ks today over at Merrill Lynch or Charles Schwab or wherever, they don't want you to move your money because you're going to pull your money out of whatever stocks, bonds, mutual funds that they're selling you that they're going to make their commissions on. So they're a little bit short-sighted in wanting you to keep your funds, they call it diversified in that portfolio, which it certainly is. But what we're helping people understand is how you can take maybe some of that money and diversify it in, again, a single company, but it's your own company. So it's an investment that you run, own, and operate and control, and hopefully the return on investment is greater because you're the one kind of driving the show of your own company. So there's a couple of audiences that we're still, you know, having to win over on a daily basis, being in the accounting world and the financial planning world as well.
Absolutely. So Paul, tell us, what is GUIDANT Financial? What is GUIDANT Financial all about? Because I know that y'all are more than just ROBS. ROBS is a huge thing of what you do, but would love to just hear about GUIDANT Financial. Yeah,
man, great question. It's funny, we started in 2003. Like I said, our two co-founders, Jeremy Ames and David Nilsson, still own the company, still a privately held business. We've got about 200 employees now. Started with just, a single employee, of course. But
the company was founded in 2003. Wow.
2003. Yeah. Wow. And it was founded by these two gentlemen who were actually doing a real estate deal out on the peninsula here in the state of Washington. And the attorney on the deal said, hey, have you thought about using your retirement dollars? And they were late 20s, early 30s, I think, their age at that time. So they didn't have a lot of retirement accounts built up, nor did they want to cash out their retirement account because, taxes and penalties. And she actually flipped over the manila folder on the deal and she sketched out this self-directed IRA. And the self-directed IRA is an interesting vehicle where you can buy non-traditional assets using your retirement dollars, if done properly. There's lots of rules around it. And they kind of were intrigued, and then they started to talk about maybe there's a business there. So we were founded on educating people on self-directed IRAs, and quite quickly, probably one of the very first customers said, "Can I use this for my own business?" And with a self-directed IRA, the answer is no. You cannot invest a self-directed IRA in your own business. And our then senior counsel at the time, Joe Wishcamper, said, well, if we meet these two exemptions, one being the stock offering between the C Corp and a rollable 401k, and the other being it must be an active operating company, not a passive investment. That's what allows ROBS to work. So we quickly evolved from a self-directed IRA company to a, let's help Main Street America small business find funding in the form of this ROBS structure. Now, to your question, that's not all we do, but that's where we hang our hat. But we can help package up SBA loans. We help doing secured lines of credit, portfolio loans, equipment leasing, basically any kind of business financing. We're your go-to. But again, we hang our hat on the ROBS structure.
Absolutely. Yeah, I was shocked to hear that GUIDANT's only been around since 2003, because I've been in this world as a CPA, like in the franchise and business buyer world. I've been in this world really since about 2014. And GUIDANT has always been around then. And I would just think that GUIDANT's been around since like the 80s or the 90s. But wow, 2003 to be the company that it is today. Kudos to all of you over at GUIDANT.
Thank you. Yeah, it's been fun. I was hired back in 2006 to help build the sales team and have driven that team forward. Now I manage the professional services network, CPAs, attorneys, lenders, and really help educate that world, if you will, about ROBS and help bring their clients in to actually use the ROBS strategy.
Absolutely. Well, it's you've been there, Paul, since 2006. It's 2022, so you must be doing something right.
I knock on wood every time I say that, but it's just been a fun company, a great place to work. And, we built an excellent reputation. Clients, we're the biggest ROBS provider out there, just in sheer number and volume. But clients don't choose us because we're the biggest. They choose us because we educate and we take care of their needs. And their needs are compliance, quite honestly. How does it work? Make sure it's set up the right way. And who's going to take care of that ROBS on the back end? We're not going to be their accountant or do their taxes, although we can. We want you guys to still have the client's business from a tax perspective, but we're there to administer and take care of the 401k plan, which is a critical piece of this ROBS structure.
Absolutely. And just, if you need to knock on wood, I see a wooden door over there. I see a wooden closet door over there. So I'm sure your desk, I don't know if your desk is wood or not, but you're surrounded by wood. So
yeah, it's probably composite wood. I think it's one of those stand-up desks so I can make it go up and down. Right now I'm sitting, but most of the day I'm on my feet just to get out of the chair. So,
hey, good. I don't blame you. I'm standing right now. I have a standing desk. I've been an advocate of standing desks for a while now. Also, so Paul, what the heck is ROBS an acronym for?
Yeah, that's probably a longer story than need be. But when we founded the company, we had this nautical theme, GUIDANT, a picture of a lighthouse, and guiding ships into the harbor, right? The rocky harbor, you got the lights on, you're trying to help people navigate safely. And the term we used was AUDEO, AUDEO. AUDEO was our brand name, and it stood for Helmsman of One Ship. All right. So we thought that was kind of cool. And then we hired a marketing firm. They said, nobody knows what any of that means. And about the same time, the IRS was actually looking at these structures and wanting to put a document out to the auditors in the field, just to really educate the auditors about how ROBS works and what it is. And they didn't have a name for it. So they came up with Rollover for Business Startup, or ROBS. So the IRS actually coined the term ROBS back in, October of 2008. So it's been around for a bit as well. But we thought it was kind of a crappy acronym, to be honest, because people hear ROBS and they think, well, I'm robbing my retirement account. No, that's not what it stands for. And then they know ROBS is Rollover for Business Startup, but they want to buy an existing business. Can I use ROBS for that? Well, yes, you can. So it's a little bit of a misleading acronym, but it's a lot easier to say ROBS than it is to say Rollover for Business Startup, or having to explain the Latin term AUDEO as well.
Right.
So, Yeah, that's where the name came from.
Yeah, and so everyone, as Paul and I are recording this Zoom right now, it's May of 2022. So we all know what's going on in the world and the economic climate right now with inflation, and so so people are really just interested in I mean, there's just a lot of uncertainty going on right now. Like you brought up a term, self-directed IRA, and so that's something that people are always asking questions about. And can you touch again on the difference between a ROBS structure and a self-directed IRA? Those two main things, like the two differentiators. Because I, as a CPA, I get asked all the time, "Hey, can I do this in a self-directed IRA, or does it have to be this ROBS C Corp, Mike?"
Yeah, great question, and we get it all the time as well. It's funny, it comes, both structures come from the exact same code section in the Internal Revenue Code, but they're kind of mirror images of each other. All right, a self-directed IRA, again, is intended for a passive investment. So most commonly, we would see self-directed IRA investors go out and buy a rental home that they're not going to live in or let their kids live in, or you can't buy property from your parents. You can't do the capital improvement on the property yourself. So it's a hands-off passive investment where the rental income will ultimately go back into the IRA. There's no cash into your pocket in a self-directed IRA. So you're just choosing to have your IRA, instead of buying stocks, bonds, mutual funds, go out and hold a passive investment like real estate or raw land or tax liens or something of that nature. The ROBS structure is such that it cannot be passive. So exemption number one, it's got to be an active operating company, and that's defined as any business that provides some sort of product or service. So if I'm mowing lawns or selling widgets, I can use ROBS, all right? And then again, the way it has to be structured is through this very specific stock. I'll give you the term, you don't need to remember it, but it's called Qualified Employer Security. QES, Qualified Employer Security. That is the type of stock that the new C Corp is selling to the new 401k plan. So because of that, the cash now sitting in your corporate operating account, now you, the person that rolled over the funds, must play an active role in the business. You must be paying attention to the investment in some job capacity, be it president, CEO, or chief cook and bottle washer in the business. You're doing something of value so that you can pay attention to the investment. You can warrant the ability to take an income, because now you're a W-2 employee of your own company as well. And the reason for the W-2 income is so that you can save back into your newly created 401k. So again, the structure was we created a C Corp, created a 401k plan, your money rolled over to fund the Corp, but that plan still exists. So that plan is just a living, breathing, normal 401k plan for you and your employees. So you can start building it back up that way, as well as your retirement account owns a bunch of stock in your own business. So the biggest differences are passive investing, self-directed IRA, kind of hands-off passive investing. ROBS structure must be active, must be hands-on as well.
Absolutely. So, I feel like obviously a lot of CPAs and financial advisors are not aware of the ROBS, and for the ones that are, their knee-jerk reaction to it is to be skeptical of it. Let's unpack some of these common, I don't want to say it could be a misconception, but really just kind of like that mindset. Like, for example, like a financial advisor is advising their clients, to do certain things with their assets under management. And so, like, what would your message be to, like, the average financial, to financial advisors out there that either don't know of this ROBS, or, of course, everyone has their agenda, and the financial advisors want to keep the assets under management, but what are financial advisors not telling their clients? Like, not because they're intentionally withholding it, just because they don't know. So maybe this is more to the actual investor out there. Hey, this is something that you want to consider because of X, Y, and Z, and your financial advisor, this is not something that he or she is even thinking about. Like, what's your message to that person out there that wants to start a business that's we know where the market is, like what's going on in the market. Is there anything there that you want to respond to?
Yeah, I mean, so several things to unpack there. I think the biggest thing is, and I always say it this way: if you asked Bob Smith, "Hey Bob, do you want to use your retirement account to fund your business?" Bob Smith is going to say, "No, absolutely not." Okay, because he thinks he's going to get taxed or penalized, or he thinks he's going to lose his potential growth in the market because he's pulling his money out of where it's been. And he's been taught his whole life, don't touch your retirement account until you're old, right?
And that's a big part of it, right? Like the reason why he's saying no is because a lot of it is just like the traditional way of thinking the financial investing industry has been for decades.
Correct. So the way I phrase it to Bob Smith, I say, "Hey Bob," and this is the way financial planners and accountants should phrase it as well. Did you know that you could possibly use your retirement dollars and invest that money into your own business without tax or penalty? Do you want to learn how? And usually the answer is yes. Bob wants to learn how. He still may not do it, may not see the value of it. But from a financial planning perspective, if Bob Smith has $500,000 in his retirement account and you tell him flat out, no, you can't do that, and Bob Smith finds out on his own that he can, he might be ticked off and pull his full $500,000 out and go put it with another broker and use some of that money for the business. So you might lose your whole portfolio for that particular client. So why not, educate yourself about ROBS from a financial planning perspective, and maybe mention that you could diversify part of your $500,000 portfolio. Maybe you need $100,000 for a down payment on that plumbing business you always wanted to buy. Well, I know a guy that can help you do it without having to pay taxes and penalties. So you look like the hero as a financial planner. You kept $400,000 in the brokerage account. He diversified $100,000 into stock in his own business. All right. Same thing from an accounting perspective. All right. From an accounting perspective, you're thinking, oh, there's a big tax or penalty that you're going to get hit by taking a distribution. No, educate yourself about it. It's not a distribution. It's a rollover. So does it make sense to pull money out of a fledgling stock market right now? Again, Michael said we're in 2022. All right, I think we're down about 25% in the first 5 months of the year, right? So it's a huge hit that people are taking. Could I have moved my money way back in January into my own company? Granted, there's a risk. I bought stock in a single company, but at least it's my own company. And I'm not getting impacted by the ups and downs of Wall Street. I'm getting impacted by how well I run, own, and operate my own business. And I can illustrate that further as what your return might look like as well. It's an interesting way to picture it from a return perspective.
Yeah, and then and everyone, we're gonna have all of Paul's contact information, at the end. So reach out to Paul and GUIDANT for all specific ROB. This is a very high level conversation about ROBs and all the nuances. Paul will be happy to talk to you about it. So
definitely.
Gosh, I mean, I like to think of ROB a big appeal to ROBs for people once they get more educated about it is it really is a bet on themselves. They would
100%.
It's a way for them to control their destiny more than the stock market.
Exactly. Yeah, and let's put math to it real quick. You're probably not going to pay cash for a business. Depends on the size of the business, right? Should always look at an SBA loan or other people's money to help with the financing. Again, a bank is not going to lend you money from an SBA perspective if the business can't support the debt. So they're kind of going to tell you, nah, it doesn't cover the numbers. You're going to go, great, thanks for saving me. I didn't buy that business, right? So the bank is that final step, if you will. Can the business afford the debt? But let's do a real world example. Let's buy that plumbing business for $500,000, all right? And we certainly need a minimum 10% down, but I'm going to put down 20%. We're going to put down $100,000. And let's say you bring in $5,000 out of your pocket and you roll over $95,000 out of your retirement account. So $5,000 from Michael, $95,000 from his retirement account sitting in the new C Corp. So we've got a new C Corp with $100,000 in it. Michael owns 5% of the company. His partner, not his spouse, not his buddy, his partner is his retirement account. It owns 95% of the business. Now we go get our $400,000 SBA loan. Okay? So we've got a $500,000 business. It's got $400,000 in debt. 2 shareholders owning it, 95.5. My retirement account owning the lion's share. Now, here's our risk. I just put $100,000, 95,000 my retirement account into a single company, but it's my company. All right. So I'm going to run it, grow it, work it, pay myself an income. I'm going to save some of my income back into my normal 401k, just like I've always done, right? Regular tax-deferred contributions by a normal stocks, bonds, mutual fund. I'm paying down the debt. It's a 10-year term on an SBA loan. And I'm doing okay, right? I grow the business a little bit. I don't make it a multi-million-dollar company, but 10 years from now, I have no debt. Let's say the business is worth $600,000 and I go to sell it. Where does the money go? It goes back to the 2 shareholders. So 5% of 600, only 30 grand, minus costs and closing fees and whatnot, right? But 5% of the proceeds of the sale go into my pocket. Not a lot of money. But 95% of 600 grand, 570, goes back into my retirement account. I only started with 95,000 10 years ago, all right, when I funded my business. But the theory is I did okay. I ran it, I worked it, I grew it, I took an income throughout the life of the company, and I sold my business. So I bought a bunch of stock in a single company and didn't hit the home run, but I hit a nice double and sold my business for a little bit more than I paid for it. Flip side of the coin, real quick, you call me up 2 years later and say, dang it, shouldn't have bought this plumbing business because there's better plumbing companies in my community. I'm not doing as well as I should. I need to sell this business to the next guy down the road, just enough to pay off whatever the balance is on the SBA loan. Well, my answer, kind of tongue-in-cheek, is bummer, right? You bought the wrong company at the wrong time, and your retirement account owns 95% of X. So you sell your business for X, whatever's left over, you might lose money on your deal. That's your risk. But that was your calculated risk. Like you said, Michael, you're betting on yourself. That's what you're doing.
Right. And, a big part of this, the biggest part of this is all about just educating the consumer, educating the client, and providing the client with all of the information so they have it at their disposal so they can make, an independent decision. And, we live in the greatest country on earth. If there's no better place to start a business than the United States of America. I go to other countries and as an American, it really helps with perspective to get out of America and to see how other economies, how other countries are. And it really just makes me, when I get out of America, just have gratitude for being an American and being a multi-business owner in America, an entrepreneur in America, because it's really difficult to do it anywhere else in the world. And the reason I say that is because we have freedom. We have the freedom to make our own decision, and there are and then another thing is when you are a business owner, when you when you are in a free market economy, you can get inundated with you can get lost on the internet. You don't know who to trust, and you don't really, and everyone has their own agenda. And so I feel like when it's on I feel like every person out there deserves to have all the facts in front of them so they can make their own decision. Like you were saying, Paul, some people might weigh all the facts and circumstances of everything, and they might decide not to go ROBS. But there are so many people out there that would, especially in an economy like people like to bet on themselves. Everyone is different, but when there's so much uncertainty going on in the market, people tend to want to just even though they know that there's inherent risk, that they just feel better, that they want to take control of their destiny. They want to bet on themselves. And yes, they understand that rolling over X amount of money from their existing retirement into a ROBS C Corp to operate their business, whether it's a resale or a startup business, is risky. They just feel better knowing that they are in control. If they are, they are in control of their success, or if they fail, at least, no one wants to talk about failure, but at least, they are in control. And that's something that is a big part of this ROBS. And so many people don't even know that it exists, that it's an option out there. Because to your point, Paul, earlier, people think of retirement, they just think of those those standard things that, you're restricting. If you want to take it out, you're going to get hit with penalty and tax. You have to wait until a certain age. But ROBS just opens up a whole new avenue, and it's just a matter of educate, because there is a segment of the market that's going to be intrigued by it and wants to pursue it, and there's going to be another segment that understands it and can wait and decide to go another route, but at least they're appreciative of the fact that they learned about it, and that needs to happen all together, as opposed to just having some person in their network just telling them from day one, ROBS needs to be off the table, because chances are that person that's telling them that doesn't know all the ins and outs of ROBS as well.
Yeah, that's a good final point there as well. The person in good faith may just not know about ROBS, and they're not giving their client the exact information, and that's what we're here to do, is just educate people and get them up to speed. And you mentioned some people may not do it because they have other options. They may have enough cash where they could have just put their $100,000 down out of their cash on that plumbing business. Quite honestly, not a lot of us have that, right? Especially in today's economy, we're living check to check, and we've been working from home for the last couple of years, and now they want us to go back in the office, and we don't want to. Right? We want to run our own show, kind of like we have. So this great corporate migration, which has just been massive. You've got a lot of people not sitting on a lot of cash, wanting to own their own business, wondering how they will. Well, this ROBS structure, where I've got my $500,000 in a retirement account or more. I mean, a lot of folks have been banking a lot of money in retirement accounts over the last 10, 15 years, money they think they can't touch, and now they find out they can. We're just opening up the doors to many more opportunities, but also potentially larger opportunities. That $500,000 plumbing business may not be enough to drive the income you need to get to where you want to be. Well, you might have enough in your retirement account to buy the $5 million plumbing business and go get a $4.5 million SBA loan. And you're freaking out about that, but the bank won't lend you the money unless the business can support it. But a $5 million plumbing business is going to generate a greater annualized return for your income than a $500,000 plumbing business. So it's going to make you a better, maybe more attractive buyer/borrower to sellers and lenders when you're out looking at these deals as well.
Absolutely. Yeah. I mean, there's just there's so much, and so people, y'all that know me, that I'm a CPA in this industry, and that one of my niche processes as a CPA in the franchise and business buyer industry is I provide complimentary CPA consultation calls to prospective buyers. And if you don't know me, that if you want to know more about that, then please reach out. But to Paul's point, so I'm talking to buyers, and they're mainly franchise buyers because of my niche in the franchise industry. But I'm talking to buyers all day, every day, year round as a CPA, and a big part of those conversations that I have with buyers are entity structure and funding. And part of that conversation about how they should go about structuring their entity and how they should go about funding their business, I always get context on the size of their investment. I always get context on their household income and expenses, and how it is now, and how it's going to be the next 12 to 24 months as they go. Are they going to go completely owner-operator or some sort of semi-passive? Do they have a spouse that works, etc.? But the third bucket is their allocation of assets on their personal financial statement. And to Paul's point, whenever I get their personal financial statement on a piece of paper, and I get it all broken down, how much they have in this asset, cash, retirement, real estate, other liquidity, etc. The retirement bucket is always not more often than not. That is the most commonly where they have the most equity. That's more, and so that's primarily where they have the most room to operate. They have limited cash. They don't have that much equity in their real estate. They don't have any or very little. Now, of course, everyone's different. I'll talk to some people that have substantial equity in other assets besides retirement. But the majority of people that I'm talking to that want to do this, that want to get out of corporate, go into, and Paul is absolutely right. There's this phenomena going on, as we like to call it, the Great Resignation, that was accelerated because of COVID. People don't want to go back to the office anymore. They want to do their own thing. And now with the economy going where it's going, people even want to just like take control of their and they want to take matters into their own hand and bet on themselves. And so when the majority of people that I talk to, the most wiggle room that they have on their personal financial statement is their retirement. And so whether they want to go ROBS or not ultimately is up to them. But in order for them to do so, they need to be presented with all the facts. And that is what Paul and GUIDANT, it's not the only thing that they do over at GUIDANT, but ROBS is your bread and butter.
Yeah. That's where we hang our hat. That's what we're known for. And I love talking to folks in that boat, if you will. And the things that Michael looks for on the personal financial statement and assets and liquidity and those things, that's what a bank is going to look for as well. So having somebody like Michael on your team is huge when you're getting into anything as large as deciding to either start or buy a business. I mean, this is a huge, huge event in your life. And if you don't have professionals like Michael on your side to help vet out the numbers and look at the numbers, put the brakes on, right? I mean, there's got to be some fear and there's got to be some excitement. The excitement has to outweigh the fear, but pragmatism needs to come in, right? What do the numbers say? And that's where a guy like Michael will help you out as well. And we can certainly help you see that you can get to those numbers by using this ROBS structure as well. So love pairing up with you, Michael, working with your clients, but definitely shooting for the same goal, and that's just trying to get more people into Main Street small business America and let them control their own future and income.
Absolutely. Amen to that, brother. And I mean, so people, you're listening, there are so many nuanced topics that I have questions. Like I have questions in my, I mean, I'm very knowledgeable about ROBS as a CPA, but I am asking questions of I have several questions that I can ask Paul that are very nuanced, and I intentionally kept the questions on today's episode very high level. There's lots of nuances to compliance and everything, and any questions. I mean, if you want to get into the nitty gritty about ROBS, reach out to Paul, reach out to GUIDANT Financial. Paul will walk you through everything. And of course, if you want to talk to a CPA well-versed in ROBS, I am here. Reach out to me. Paul, thank you so much for joining me today. It's always a blast talking with you. We're going to have to do it again soon.
Thanks, Michael. Really appreciate it. And thanks for your time as well.
Thank you, Paul. And everyone, as we close, you're going to have all of Paul's information right as we close here. It's going to be at the end of the episode. Don't forget to subscribe to the Swartz and Reeder Advisors YouTube channel. Bye, everyone.
Thanks, Michael. Appreciate it.
Thank you, Paul.